What's up, guys? Happy holidays, everybody. I hope you all enjoyed it with your loved ones, friends, and loved ones. So today I just wanted to share one of I.C.T.s trading strategies called the Power of Three. As I was reviewing charts this morning, I came across a really good example of market structure that displays this I.C.T. Power of Three trade setup. So I want to share that with you guys and explain how this works. Okay, so the first thing we need to look at is phase one of the Power of Three, which is accumulation. Accumulation, as you can see, forms during the Asian session. We have this tight range, price stays within the range, entire Asian session as orders are collected on the buy side and on the sell side. So as pre-London comes around, price peeps above the Asian range slightly, and then manipulation begins. We begin to see a bearish move, a pretty strong bearish move to the downside, right? And this is all happening within the I.C.T. timing theory strategy, which is from 2:30 a.m. to 4 a.m. New York time. So this whole price action begins to give us signs and signals, structure showing that there's a power of three in the making. So manipulation is happening to the downside within the correct time frame. We see a quick support form. We have a nice pullback, bullish pullback, and then we have a retracement right into a 15-minute order block. And as you can see, price fails to make a lower low. We hold at that structure, and this would be the first buy entry. We use a 15 pip stop, which is plenty to give us room below the candle that forms the order block. That'd be the entry. In this trade setup, we're aiming for the weekly equal highs above, which is buy side liquidity. This trade example would have been a 15 pip risk for an 84 pip win, 5.6 risk reward ratio, which is extremely good. So we have two phases in play already. The third phase is distribution, which is the correct move for the day. And as you can see, distribution is bullish. So we have the buy take place. We come up to the Asian range high, small pullback. We break above that Asian range. And now this creates a market structure shift. So if you don't have the confidence to get in at this first order block and you want to wait to ensure that price is forming as you're expecting, it's okay. You can enter at this buy number two re-entry formation. We have a second order block here. That would be your entry, 15 pip stop again below the order block candle here. And you'd be aiming for the weekly equal high buy side liquidity, which is our PDA array for the day. All right, so distribution continues to the upside, forms a new high with a retracement, higher high, small retracement. And finally, we hit the objective, which is a weekly equal high, is buy side liquidity. So by 11 o'clock New York time, you're done with the trade. So again, this is I.C.T.s Power of Three, which consists of accumulation, manipulation, the false move. We have some sort of support form. If it would have been in reverse, we would have resistance form up here. And then we have market structure shift to the downside, break below the Asian range with a pullback, and that would be the entry to the downside. But again, this is a bullish example. And again, this is I.C.T.s Power of Three, which consists of accumulation, manipulation, and distribution. All right, guys, so look for this in your daily charts. It happens at least once a week in every single pair of Forex. And if you can spot these, this is a solid setup that can make you good amounts of money on a weekly basis if you can just be patient and look for it within your pairs. Hope you all enjoyed the video, and we'll talk to you tonight. London Open. God bless.